Looking ahead to this week, market volatility could be a big thing. Today we'll break it down. We've got a special guest. Let's just jump right into it. I do want to thank our sponsor, and that is Tangem. This is where you can get into self-custody. And this is a physical wallet, works with your phone, very easy to set up, super secure. One of the best wallets out there. I would recommend trying out self-custody. If you haven't done it, this is the way to go. Just go over to tangem.com. You can use our link down below to help you guys get going and begin your self-custody journey. All right, I want to bring into the show Zach Pandl, who is the head of research over at Grayscale Investments. Zach, how are you?
I'm great, Paul. Terrific to be back on with you again today.
Yeah, good to see you. I want to go into really the first topic of the day, and this is really all about the government shutdown. We saw advisor Hassett says we could see a government shutdown likely to end sometime this week, so that's positive news, or at least it appears to be positive news. When you look at the government shutdown and what we've seen in general from the crypto markets, but more importantly, getting these ETFs approved, how quickly do you think we're going to see reaction in the market, whether it's ETF approval or the market correcting itself?
Yeah, the government shutdown is dragging on at this point, now 20 days long. I believe the prior record is 35 days
yeah.
From Trump's first term. And I hope Kevin Hassett's guidance is right. You know, he's a good sport, but I do feel that this could drag on to a new record given the polling data, the party positioning. I'm not sure I see the end to it happening this week. We will see. Now, of course, some of the government stays open, critical functions. Unfortunately for the crypto ETF or ETP providers, one of the functions that does slow down is approval of these types of products. As your viewers know, we've been eager to bring to market lots of essentially altcoin ETF or ETP products, and we still think that that is coming relatively soon, but the government shutdown has definitely slowed down the process, so investors will have to wait just a little bit longer to get access to these types of products.
Zach, with what you know of the SEC process to get these approved, and you look at what's happening with the SEC right now with Adkins and a host of commissioners that have been somewhat pro-crypto, and Adkins seems to be dropping nuggets left and right on Twitter and in variety of interview statements. Do you feel like this is will it be kind of like a pent-up demand where they'll accelerate coming out of this shutdown and really get to work on getting these approved?
I think in general that's right. You know, we have a cooperative relationship with regulators, and we want to respect their process. But the SEC has already clarified how this is going to work, essentially by creating what they call generic listing standards. They're not going to go one by one through every crypto token and to say this one can be ETF and this one can be an ETF. Instead, they're going to give us a set of generic criteria. And if the assets meet those criteria, they can become an exchange-traded product, ETP, or ETF, as most people call them in the marketplace today. So I do think it'll be a kind of big bang event over the next couple of months with lots of different products coming to market. And that'll be both single asset products, like we have for Bitcoin and Ethereum, assets that hold just a single token, as well as a variety of diversified products. We already have a product like that in the market today, a top 5 tokens product. We think we'll see more of that as well. So I do think investors can expect a big bang type of event once the government reopens.
I like that. Sounds good to me. I think in the sense of really seeing the SEC actually get out there and get to work on this. Altcoin ETFs face a very decisive October right now. And to your mention right there, the new listing standards. But a few points that were in this article specifically by you. You had a handful of statements within this that I thought were interesting. Solana and XRP stand out. And this is because of their existing futures market. And you cautioned against expecting Bitcoin level inflows. Why do you think that will be the case with a market primed and what feels like a little bit of a pent-up demand for these kinds of products?
I think there will be high investor demand for these types of products. And as you say, to some degree, pent-up demand. You know, we call them altcoins, But really, there are tons of the innovation that's happening in public blockchain technology in the crypto industry is beyond Bitcoin. Now,
Right.
Bitcoin is still the big dog, more than $2 trillion asset, and it's going to dominate the crypto market for some time. But other assets that you mentioned, Solana, XRP, these are important parts of the ecosystem as well. And I do think that they will also be very popular with investors. So altcoins, maybe we should move beyond that term. These are other innovative technologies based on public blockchain technology besides Bitcoin. And there's nothing alt about them in some shape or form. They're really key parts of the ecosystem. I think that they will be very popular from investors once we can bring these assets to market.
Well, you look at it, it's kind of like in reality, there's a handful that I think fall into that. Obviously, Ethereum, we've already seen its performance. Solana, definitely, I think its day is going to be coming. XRP, another big winner out there. Outside of Bitcoin, you start to roll into some of the other assets like SUI, Avalanche, et cetera, kind of its own Mag 7, at least in the crypto world. Now, you also made a statement in here that I thought was interesting. Not only are bringing these single asset ETPs to market, but also the first diversified index-based crypto ETP. So my question is this, do you think the single assets will do better, or these bundles and these basket products? What works for you guys?
Yeah, well, the question really is what works for investors. We're trying to service our clients. And what you see in other asset classes, that the index-based investing approach is very popular with investors. And of course, it has a long track record of success in other asset classes, and frankly, a pretty good track record of success in crypto. We've been running these products since 2018, diversified index-based approaches to crypto investing, but we're thrilled to now be able to offer those products as ETFs, the structure that investors enjoy. So just in the last month, we were able to uplist our Grayscale CoinDesk Crypto 5 ETF product. So it's top 5 tokens by market cap. And that covers about 90% of crypto market cap just with those 5 tokens. In my personal view, these products will be even more popular than the single asset products in the longer run, because many investors don't want to be stock pickers. They don't want to be token pickers. They just want access to the asset class, and this will be the avenue for them to get that, just like the S&P 500 or the aggregate bond index in fixed income.
Yeah, I think, when you talk to normal people who have not been in this space and they're just getting exposure to crypto for the very first time, they're typically going through a lot of these exchange traded products. So I kind of agree with you there, except for maybe the top 3 or 4. I still feel like Solana, XRP, those communities kind of vibrate into other communities that haven't been in crypto. Those are the ones that I think will stick around and probably do pretty well individually, but we'll see. Hey, it's it's still very young.
I think both types will be very popular, diversified, single asset products. We're delighted to offer both and give consumers the choice.
Yeah, for sure. Zach, we have been watching some very unusual anomalies happening on our own channel. As you guys know, we cover a lot of the DC topics over the last several years. We also do deep dives on regulatory fronts. We're seeing some very unusual scenarios playing out on many of our videos. And the reason I say this is because it appears that we've got something happening in DC. We've got a lot of C-suite guys that are attending this new Senate Democrat pro-crypto meeting on Wednesday. This is going to discuss market structure legislation. So my question, when you look at the lineup here, pretty stellar, along with the demand of what we're seeing just on our own data of videos being watched, is something happening right now in DC where we may see accelerated approval on regulation? What's your opinion on that?
There is definitely something happening in DC, and to some extent that's been happening all year, but I think you're right that this process is going to pick up. Look, President Trump came into office with a mandate from voters to bring regulatory clarity to the crypto industry here in the U.S. And this is not a Republican issue or Democrat issue. It's a bipartisan issue. Crypto blockchain technology is popular with voters. And so it's great that our legislators, our elected officials are dealing with this now. We had one big down payment in July, as your viewers know, the Genius Act, which was targeted at stablecoins, one critically important piece of our industry. But we really need to broaden that out to other aspects of market structure, how exchanges are going to work, how disclosure requirements are going to work. Crypto is growing up. It's getting integrated into the mainstream financial system. It's important that we have that regulatory clarity. I do think that we can expect this process to pick up steam heading into the end of the year. It might take until Q1 or so until ink hits the paper, but we're optimistic that this process is moving forward on a bipartisan basis, which is really critical for its long-run sustainability.
I know there has been a lot of Democrats that have kind of, I won't say, this is really not an issue of crossing party lines, because this has been a very bipartisan approach. I think from really about midway through, once that we felt like we were able to defeat Senator Warren's anti-crypto army, we started to see people coming to their senses over the, really over the past 18 months, which has kind of set us up for some good things to happen in crypto for sure. Speaking of good things to happen, we've got to get a trade deal with China. We get this in from Watch Guru. President Trump says, Chinese President Xi Jinping says, maybe we're open to a trade deal here. Now, many people would say, hey, this is Trump always, chickening out, or is he carrying a big stick? What's the strategy here in terms of how Trump is approaching trade with these countries? And do you think we're going to actually get a deal with China?
Well, it's a tough question and a challenge for investors to try to navigate these things. As a general matter, I think you can expect the intense negotiations to pick up before these one-on-one meetings, before these summit events, and then for them to de-escalate close to that event or around that time of event. Look, the U.S. and China, the two world's most important economies, complete decoupling between these economies is infeasible for both parties. And so we're going to continue trade relations on some terms, but there'll be new barriers in place to protect things like national security interests and to some extent to support domestic manufacturing. I think President Trump has offered a pretty clear message along those lines. And also, I frankly think that that is also a bipartisan view at this point. So we can always, pick out the approach to negotiating, but this is where we're heading is, a bit more barriers between the U.S. and China, but continued trading over the long run. And that's okay. That sounds like it'll be in the best interest of both countries. So what does that mean for crypto investors? I would say don't lose sight of the bigger picture. We do have challenges, government shutdown, trade tensions, some credit questions in pockets of the lending markets, but crypto fundamentals look solid. I've never thought that blockchain technology was more important for the world than it is today. So, keep an eye on those key trends and, try not to get too distracted by some of this trade and political noise. That's what I'm trying to do. That's the message we're giving to our clients.
Well, I think a lot of people get lost in this idea of short-term thinking, as opposed to, it depends on what your time horizon is for many of you guys watching. Maybe it is 3 months. But for most people, I think investing in anything, whether it's S&P, whether it's real estate, whether it's stocks and bonds, you get into scenarios in crypto, people are starting to stretch that time horizon out quite a bit. So I would agree with you. I think the good side is still yet to come for a lot of what's happening in crypto. Speaking of that, the Fed is hosting a conference. What do you make of this? This is a conference on payments. You've got Chainlink, Paxos, Circle, Coinbase, and a whole slew of panelists that are going to be there. You've seen and talked to a lot of these companies, and you've had a chance to kind of understand what their ideas are in general. This is the Fed, who has been very, relentlessly in a position of, I feel like, anti-crypto overall, when you wouldn't let banking charters to come in. Why do you think this is happening now? What do you think is going to happen from it?
Well, it's overdue. That's why it's happening now. The Federal Reserve is one of the key banking regulators and the key payments regulator, and this is financial technology that's coming of age, that has regulatory support from things like the Genius Act. It's critically important that the Federal Reserve plays a role in understanding that technology and ensuring that there are consumer protections and protections to the traditional financial system. So they're doing their job, and I think this is part of a part of that. So I think this will be a very productive conversation between industry. I do think that the Federal Reserve staffers and officials are pretty well informed at this point. You know, it's taken a few years, but I think that they have come around to the idea that stable coins are just payments innovation, and that they should be supportive of efficiencies in the financial system and payments, just like everything else. Because that happens on a blockchain, there's no reason to be concerned about that. So this is overdue. It's a great sign, exactly the thing that we would expect from our key regulatory agencies like the Federal Reserve.
Zach, you've been in the business for a while. You've had a chance to see this, really this innovation take hold around stablecoins. Do you think that the estimate around stablecoin adoption over the next couple of years, I mean, some people are throwing out like $3 trillion to $4 trillion numbers potential. Do you think that's real? Do you think we could see that kind of real uptick in stablecoin usage?
Well, it's not real until it happens, but it is a realistic expectation. I would put it that way. You know, this is an innovation that's bringing consumer benefits. Lower cost transactions, higher transparency transactions, faster transactions, things like this. And so if innovation brings consumer benefits, consumers will adopt it. And it's financial technology, so it is important that it is regulated and is protecting the financial system as a whole. So all those pieces are coming into place. We have a great piece of technology that's bringing benefits. We have a regulatory framework and an understanding by agencies like the Federal Reserve. I absolutely think these types of big numbers are realistic numbers for where stablecoin adoption can go over time, and I think larger than that, frankly, in the fullness of time. We are just getting started on this really key payments innovation that will be ubiquitous in the future, and we're here at Grayscale teaching people how to invest in that premise, invest in the infrastructure, whether it's Ethereum or Chainlink or other aspects of the ecosystem. How do you invest in that core thesis of stablecoin adoption?
Well, you look at that, you guys are also launching the first US spot crypto ETF with staking. So you're going to let investors and earn blockchain rewards in regulated products. Do you think we're going to see ETFs staking soon across a variety of different projects out there? How close are we?
We are thrilled to have been able to be the first to offer staking in our exchange-traded products. Investors want income on their assets, and there's lots of different ways to do that. Of course, coupons on bonds, dividend on stocks, even things like selling options can be a way to generate income. Staking rewards are a unique source of income in the financial system. And diversification is key across your investments. So to be able to build in a diversified source of income is something very special, something that is truly unique. And so we're thrilled to be able to offer this now in our Ethereum exchange-traded products already. We've begun this in our Solana a private trust product that we hope to be uplisting as an ETF relatively soon. And I think many others will follow in that process. Grayscale has been working on these issues for years. So we were maybe ready to go a little bit faster than others on this topic, and so are already able to offer these in some of our products. But we expect that to be rolled out very broadly across our product suite over time. So just the beginning with Ethereum and Solana, but I think investors can anticipate if a product, if the blockchain offers staking, that your investment products should be offering staking rewards to some shape or form with the appropriate kind of risk management around that. So a unique source of income. We're thrilled to be able to have those in market today.
Zach, do you think we could get this even if the government shutdown does not get finalized? Do you think this is something that could happen anyway? Because this could go on for another month or two, as you were kind of indicating.
That's right. Yeah, we are doing everything that we can during the government shutdown. That includes the introduction of staking, so something that we were able to accomplish despite the uncertainty in Washington. And watch this space. I think the product launches may not entirely come to a halt despite the government shutdown. So we are working extremely hard and always cooperatively with regulators. It has definitely slowed things down slightly, but watch this space. I think there could be more crypto ETP products launched even while the government remains shut down, and that's thanks to the hard work of lots of my colleagues. So I can't make a promise here today, but I think that is possible, even if we don't turn the lights on in DC right away.
Hey, listen, I like the optimism for sure. In comparison, if you look at the DAT versus ETF route that many people are trying to figure out right now, this could be the key thing for ETFs to kind of compete with the DAT. Digital asset treasuries, for some of you guys out there, you probably have been tracking MicroStrategy, or maybe you're tracking Bitmine, the two top when it comes to Bitcoin and Ethereum. Do you think that is a requirement, the staking component that would actually make these two asset classes somewhat equal in terms of investment thesis?
I do think that staking rewards are critical to be offering the best investor experience in the exchange traded products, or ETFs. You know, this is a source of reward that it's available if investors were to stake with Solana on chain, for example. We want to make sure that they are capturing that reward if they're going through the ETP product structure. There's lots of reasons why the ETPs are beneficial to investors. You know, even simple things like managing your accounts and your taxes and all that type of thing. And so that's why they're so popular. But it is important that we offer these rewards, and we're delighted to be first to the line on that process. You know, Grayscale has been an innovator in this space for a long time. We're delighted to be able to innovate on the first diversified products, the first staking ETFs, and I'm sure others will follow in our wake. But yes, it is a critically important piece of offering the most efficient ETP structure for our investors, and we're delighted to be able to do that.
I'm looking at the Grayscale AUMs and kind of just the line list of trusts that you've got out there that are set up for these products. And you can kind of see it. I mean, we're seeing a fairly centralized group at the top. If you compare the Solana ETF and the XRP ETF, both of which could be going live any minute, when these do launch, which do you think is going to launch with the most success?
Well, that's difficult to say. You know, I sometimes joke that these questions are like asking me to decide my favorite child or something like that. I think I really am, you know, of a fan in different ways of many of the top assets. And, you know, we are happy to engage investors on our kind of research level to the extent that they want to kind of go deeper. Starting with a diversified approach is a very natural way to begin most investors' crypto journeys. So our Crypto 5 ETF product, for example, is a great way to begin. And if investors want a little bit more XRP or they want a little bit more Solana, they can certainly add that a la carte on top of the diversified approach. And we're happy to walk people through that process. But I do think that each of these blockchains offers something unique. You know, they're each trying, have different designs, different goals. They're offering something unique. It is difficult to decide among the favorites. I think owning most of the large cap asset is a very reasonable way for investors to begin their crypto journey.
I want to go over to a clip. This is James Seyffart coming over from Bloomberg. He made a statement here about Solana that kind of caught me a little bit off guard. I mean, you kind of know it, I think, when you have been around the Solana ecosystem for a while, but for him to say it was quite interesting. Let me play this for you.
And also, I think there's a lot of pieces of things that blockchain can be helpful to that doesn't require like extreme decentralization the way that Bitcoin is. But there's also people that would like things to be more efficient and cleaner and move faster. And a lot of people in TradFi like the idea of like getting some of this decentralized benefit, everybody on the same ledger, but also it be pretty damn efficient and not slow and not cumbersome to bridge between different things. So I think all of that is like critical for what's going on here. Yeah, and obviously part of it is the Trump administration and this new SEC is leading heavily into this idea of tokenized assets. We're seeing all the big exchanges, NYSE, NASDAQ, CBOE looking at tokenized stock and different things along those lines. And Solana is in the conversation every time those things come up.
So Solana's in the conversation. This is talking about institutional awareness, which is usually the first step in the right direction when you get institutional capital flow coming in. Then you look at the recent news of what happened here to Coinbase, and this starts to get a little bit closer to home, because I know this is an AWS outage that's like comparing a, Godzilla to a lizard, when you're talking about Solana versus AWS. But the point being is that it brings it into the mindset of an institutional investor who says, wait a minute, AWS is going out and Solana is holding up over here. Can this be a future for this? So it's intriguing around this. So this might be the way that Solana gets an edge, if they in fact do get an edge. We'll see.
Absolutely. Solana is one of the central projects in the industry, frankly, and it stands out really on the basis of something that every investor can understand, which is just the fundamentals. Solana is an on-chain leader in terms of users, transactions, fee revenue, and that's both the underlying blockchain itself, or the layer one, and all the applications that are built on top of it. So, we call Solana crypto's financial bazaar, like a bazaar in the real world. There's a lot going on, a lot of people, a lot of commerce happening, and all that is a foundation for the token's valuation over time. So I do think it has a very strong fundamental foundation. And exactly as you say, Paul, as institutional investors are approaching these topics, they do come with sharp pencils. They look very closely at all this, at the foundation, at the underlying fundamentals, at the underlying data. And I think Solana screens very well in that sense. And these ETP products, as soon as they're available to the investor, will be popular for that reason, just because it stands out very well on the basis of on-chain fundamentals.
Yeah. All right, so I have to ask you this question, and this is how does this market flow into the next few months? Many people are looking at this pump that we're in right now, Bitcoin back above 111, I think, as we're recording this, 111K. So you look at what has happened over the last couple of weeks, huge liquidity events, many people now challenging whether or not liquidity is still in crypto. Many people looking at crypto now, is this just a slight pump before an exit? Or is this setting up for some stellar run around this? What is your opinion on this? I know not financial advice. We're not talking about a price prediction here, but just in general, are you still bullish on where crypto is right now into these next few quarters?
Well, let me put it this way. I am very bullish on crypto's fundamentals and think the trends are pointing in the right direction. Now, crypto is increasingly a grown-up asset class. It's not something that's independent of everything else that's happening in finance. And so whether we have a real strong run into the end of the year is partly a call on these macro things: government shutdown, tariff conflict, credit issues, and private credit markets. And so my judgment would be those do cut in a positive direction. I am optimistic on those things, and I think we will climb the wall of worry into the end of the year. But I'm very comfortable with where the crypto asset class is, and I'm making a judgment on some of those macro factors. Sure. I think they will cut in a positive direction. Put those two things together, optimistic into the end of the year. But I just like to encourage people to remember that it's not just about all the great things that are happening in our asset class that we've talked about, regulatory change, ETF approvals, et cetera. It's also these macro factors that'll determine how we end up come DC31.
No doubt. Listen, if you guys have been watching our channel very long, our inflection point a few years ago started really focusing in on the macro angle, because we felt like it was going to be the critical component to really kind of step this crypto market into the 12th sector. And I think that's where we are now. How this plays out in the continuation of it is going to get interesting, because it's not that I'm saying that the meme seasons are done or altcoin season is done, but I think you're going to see these massive winners in these big sectors, and it's going to be interesting. Do they carry along the rest of the market? That's the real question everybody's asking. So thanks, Zach, for coming in today. We appreciate it.
My pleasure, Paul, as always. Thank you.
You bet. All right, you guys, you know what to do. Join the Diamond Circle. It's our own private group that you can be a part of it. It's absolutely free. We always leave a link down below, and all you have to do is click that, jump in, simple. And then, of course, check me out there on X at Paul Barron. You can also catch me on TikTok too, official Paul Barron. So we'll see you soon right here on The Paul Barron Show.